Hello, it's Melissa with Price Plan Profit. If you've ever struggled with when to take profits or where to exit your trades, this video is for you. I'm going to show you the exact process I use to set clear, confident trade targets using inside candles and Fibonacci levels. So every trade has a defined purpose. Let's get started. Why do trade targets matter? Targets offer a clear structure to lessen emotional choices. Setting scale out levels increases the consistency of risk to reward. A strong target plan helps transform randomness into discipline. Traders often focus on entries but ignore exit strategies, and I don't want that to be you. Most traders focus heavily on entries, but exits, that's where the money is made or lost. Without defined targets, you're flying blind. Trade targets eliminate guesswork and bring structure to your strategy. Let me show you how I find those targets. First, I start by finding inside candles. Why? Because they show compression, a pause in momentum. When price breaks from these candles, it often reveals where the real buyers or sellers are setting. That's where I build my zones for final targets. And I also use them for entries. Next, I want to talk about why inside candles are so important to me. Inside candles represent market indecision. The moment they break, the market is showing its hand. These breakouts often lead directly into fresh supply or demand. That's my signal. Those are the footprints I follow. And the larger the breakout candle, the stronger the zone in most cases. Also, zones that have not been tested before are more reliable. So if the target is a fresh, strong zone, I want to have tight stops once price gets there. For my scale out targets, I like to use Fibonacci levels. Once I have my zones, I map out the scale outs using Fibonacci. This gives me a roadmap for trimming profits while still letting runners run. I trim first at the 38.2 and move my stop to break even. I scale more at the 618, and if momentum stays strong, I aim for the 887 or my final target. It's a step-by-step path, not a guess. Each level is based on how price naturally breathes. Let's go to a live chart and put it all together. All right, here we have a chart of Google. So I first want to set my demand and supply zones. So starting with the supply zone, I want to look up and to the left, identifying the inside candle and then a strong breakdown candle in this case. And I also want to continue looking left to see if there are two zones back to back. In this case, there are, this being the first supply, and then just above it, we have a second area of supply. So I'm going to combine those two areas of supply, those two inside and down candle formations, to create my zone for an upside target. I like to color those red. That just signals in my brain that it is supply, and that would be my upside target. Then to find my demand zone, I want to look down and to the left, looking for that large breakout candle after a series of inside candles. And then I continue looking to the left just to see if I have another inside candle followed by a breakout candle, which I do. I'm going to combine those two zones, and this would be my downside target or my demand zone right here, and I color those green on my chart. So in any of my videos, if you see a green zone, that means it is demand, and a red zone means it's supply. So now I have identified my supply zone and my demand zone using inside candle formation. Next, I want to identify the most current trend. So if I zoom out some on this chart, we can see that based on when we made the low back here in April of 2025 on Google, price has been moving to the upside. We are making higher lows. Now we came up here, we created some supply, and we've pulled back. But if I run a Fibonacci retracement from that low to this swing high, I would get Fibonacci levels. I can see that price is holding inside of the bull channel right now. So this would be my primary Fibonacci. I'm going to remove the 23.6 because price is currently below that, and it wouldn't be a level that I need to use to scale. But this 38.2, if I were trading to the downside on Google, would be a scale area. Next, I want to run a secondary Fibonacci of the most current move, which is to the downside. I can run that from this high where supply was created down to the swing low, and this is going to give me upside Fibonacci trim levels. Now, I like to use the 38.2, the 618, and the 887, and I remove the other levels off of my chart. So now I have both my scale out targets as well as my final targets. So on a trade in Google, if I were to go long, I have a scale out target at 167.87, 171.50, and then my final target 173.24 by 177.36. As far as a trade to the downside, this trade plan would look like this. I go short Google. I want to trim at 164.28, and my target is 160.30 by 155.10. So now I have a trade plan both to the upside and the downside with defined targets so that I'm not reacting on emotion once price gets there. I also want to show you, and we'll use this same chart, how I find targets for a day trade. So let me go ahead and clear these drawings off. I like to use a 2-hour chart, and I do the exact same process. So I'm first going to find my supply zone or my target to the upside using inside and down candle structure. And I'm going to color that zone red. And then I want to find my downside target or my demand zone on this 2-hour chart. And I want to color that zone green. So now for a day trade tomorrow in Google, I would have an upside target and a downside target. But I like to scale out of my trade, protecting profits and moving stop losses up as I do. So the same process, I want to measure the primary Fibonacci, which is to the downside right now. And then I'm going to remove any of the Fibonacci levels that are below where price is at because I'm using this primary Fibonacci retracement as scale outs on the way up to final target. meaning I will remove the 23.6 and the 38.2. Like that. And then you can see the 887 is right at my target, so I'm going to remove that one as well. So this gives me a plan for targets to the upside. Now, if I do the same thing with this secondary fib and measure this current up move on Google, it's going to give me scale targets on the way to my final target. Now, if you are okay with scaling out this many times, you can leave all the Fibonacci's on here. But for me, I would rather just concentrate on the 38.2, the 618, and the 887 when I have a very tight range. So I'm going to remove those other Fibonacci levels like that, hit OK, and now I have scale out targets to the downside as well as scale out targets to the upside. And of course, I have my ultimate upside target and my ultimate downside target. This is how I create my targets, both ultimate targets as well as scale out targets. Here's the truth. Price doesn't always hit your perfect level, but that's okay. The goal is to stay structured and responsive. Be flexible enough to adjust, but never random enough to trade on hope. If this breakdown gave you clarity, hit that like button. Subscribe for more step-by-step trading playbooks. Let's grow our edge together. And if you're tired of trading alone or want to see how I prep and trade in real time, click the link in the description to join me live in the trendy trading room at Simpler Trading. I look forward to seeing you in the next video.